So now I'm going to ask you a couple hard questions. You ready?
Sure.
Is there anything that you've changed your mind on since learning about becoming your own banker? Like this is like life-changing moment, 2014, you're learning this, you're getting your policies, and then you partner with Brent in 2018 and you're learning. I've changed my opinions on a ton of things, and I have zero regrets, but there's things that I'm like, man, I changed my thoughts here and I changed my thoughts here and I changed my thoughts here. Anything that you look back on, you're like, okay, no regrets, because I know you well enough that you're not sitting around sulking. But is there anything that you're like, man, I wish I would have said things different, or I have a better 100%. Understanding now than I did in 2018?
In the beginning, and I think this is because I come from Wall Street, it was always numbers. In the beginning, I was so hyper focused on the numbers, like the spread and like doing the actual math on everything. And I will say that I'm not saying it was a mistake, but it was short-sighted because it's never about the numbers here. And the numbers don't even matter. And people won't understand that listening to this, but it's not about the numbers, it's about the process. And I really kind of wish I did it earlier, but I really pivoted to really teaching a process that it involves numbers and it involves all that stuff, but I don't need any numbers to teach what I do today. It's a very simple, repeatable process that every single person out there can do if they set their mind to it. But other thing I did is I always wanted to help everybody. And now I know who my client is not, so that I can figure out who my client is, and I know who I can't help. And it's hard for me to still, even today, tell people no, but I tell a lot of people this isn't right for you. And I think that's helped me tremendously. But
is it mindset or money?
Mindset, 100%. Mindset.
What makes someone not a good person for this process?
They want quick money. They think getting rich quick is the way to go, and they're buying into all the newest, latest, greatest, whether it's Bitcoin or whatever else. I'm nothing against Bitcoin, but like the quick money. They just want to get rich fast, and this is not for them.
It's interesting. Thing that I say a ton is like, this is not an investment. This is not an investment, because I think if you compare it to an investment, it's just unfair across the board. There's unrealistic expectations. But if you compare it to a storage place, a protection vehicle, it's like you actually understand the multi-dimensional aspect of life insurance. It's pretty incredible the multiple jobs it gives you. It's like, if someone really leans into that, it's a game changer. If life insurance didn't have any other benefit other than the rate of return and borrowing function, unpopular opinion, I don't think what we do is that valuable. So it's like, we can talk about arbitrage, and I personally don't believe that I think we talked on your show. It's like arbitrage. And so, but when you start adding the death benefit, chronic illness riders, protection, the tax benefit, now the tax benefit potentially makes their arbitrage if you factor in taxes. And you start adding in all the benefits you're getting with life insurance and the original epiphany that you had. You're like, I get $1 doing two things. I think from an entrepreneur, I find that entrepreneurs or people that understand real estate really get this.
They do.
Because they're like, okay, you're telling me I get all the benefits of all this list for the rest of my life, and I get to be able to make moves over here. Like that for me is really, really special and powerful. When I first got into this, though, I was hyper focused on the numbers as well. I said I cared about all these other benefits, but I didn't. And so it would be like, I would really have to justify some things. But now understanding all the benefits of life insurance is like, man, I become less analytical too. Like, numbers are important, don't get me wrong. Like, they're super important, especially if you're comparing one policies versus the other. Very, very important. But at the end of the day, it's like, no, like I value creditor protection. I value having a death benefit insuring my life.
100%.
I value having more options in the future. I value understanding how this could be a super bond in the future. And it's like, when you start,
it will be a super bond in the future.
Right. And so when you start adding up all those benefits, it's like, I don't know how, like, everyone needs this.
Well, you remember back to the Mike story. Remember, he didn't tell me what it was until the end, but he told me what it did. And I could think of nothing other than, I need this. And then he told me what it was, and I'm like, I don't want that. How many people actually go through that? They want everything whole life does, but then when you tell them what it is, they don't want it anymore. That's sad. That's what I mean by understanding who my client is not. So I can understand who my client is. And the other thing that's vitally important for most people to understand is, I know, it's easy for people to hyper focus on the whole life, because it's the product, it's tangible. But just so everybody understands, you'll never get wealthy because of whole life. Whole life will never make you wealthy. But applying whole life to the process called the infinite banking concept pioneered by the late Arnold Nash will make you wealthy beyond your wildest dreams. And you will the difference between a person that's rich and wealthy is a person that's wealthy learns how to not give the money back.
Yep.
Rich people make it and give it back. Make it and give it back. Wealthy people never give it back. The infinite banking concept makes sure that you never have to give the money back because you control all the reasons. You plug all the holes in your financial
Let's
life.
unpack that. Let's unpack that, because I look at, when I think of infinite banking and using life insurance, I look at it as a better place to save my money.
Yes.
Okay. So I'm saving money, and I could save it into a high yield savings account, and I could take that money out, do other things, and pay myself back, just like the process.
To the bank account.
Yeah, to the bank account. I'm earning right now 5% interest, but 2 years ago it was less than 1%. So it's like, okay, that's the banking function. And from a financial standpoint, Chris, like, you could argue that depending on the situation, you almost have just as much money as an infinite bank. Like,
you would. And that's important.
Right.
Everybody's short-sighted.
Yes.
Okay? 5% on a bank account or high yield savings. They're like, why would I ever do a whole life where I don't even, I make less than I would in a bank account? People forget banks are only paying you high interest because we're in a high interest rate environment, and it is cyclical, and that will change. I bet next year will come off. Jerome Powell has already said next year at the latest, we will start coming off of these highs. So your bank account is not fixed.
Right.
It will not stay at 5. It will go to 4 and 3 and 2 and eventually be nothing. Whole life, the one vehicle that everybody hates, but everybody needs to understand, never changes.
Right. Well,
never changes.
Yeah. I mean, there's built-in guarantees, and whole life will get long-term 3, 4, 5 times greater internal rate of return than a savings account. So but that process, like, okay, so it's a better place to save your money. It's a better place to save your money. And I agree with you. Infinite banking won't, I actually believe that what will make you wealthy is your ability to create value and the activities that you do in investing. Mm-hmm. So my ability to create value, continue to be able to serve, build all these things, creating money. Life insurance, infinite banking is a place to keep it. Obviously, tax strategies are also important. Keep your money. And then how I utilize that money is important. So you could say whole life is a core component of that, but I would actually attribute the true wealth to creating, multiplying. Life insurance is foundation. And the beautiful thing is, when you look at, like, we're in this beautiful building, we don't see the foundation. Nope. Foundation's not sexy, but if they didn't have a foundation, the building doesn't get to be like, it's not here.
Well, the interesting thing.
So it's just like, I think I don't get as, because I see infinite banking get overpitched. And I'm going to ask you another question about, like, all these people on TikTok and all these, like, and it's just like, part of me, Chris, really is like, I get frustrated by that, because it's not that it cheapens, but it's like, you're not going to get wealthy putting life insurance and then buying sports cars. It's like, the only way that works is by you creating more money. You could justify, like, you driving a sports car, you now show up more powerfully, you make more money. And yes, your money's compounding over here, but it's not like, it only makes sense if you're making more money in the activity, and life insurance is just an efficiency foundation. It just helps you create more efficiency in the process. But if you're not creating and if you're not multiplying, it's not going to change your life.
Our company name is the Money Multiplier.
Yeah, there you go. But you get what I'm saying? This is
none of infinite banking doesn't work without creation. You have to be able to create.
Right.
So if when I talk to people about this, and just eliminate the vehicle, the whole life, because you're right, you can't see the foundation here. And what a lot of people don't understand is the wealthiest families throughout history. I've done a video on history. I did more due diligence on that. When you start looking at all the bankers, Morgans, the Stanleys, and all of them, they all used whole life as a foundation for storing their wealth. But nobody knows that because it's a foundation. You don't see it. They don't talk about it. They don't be like, oh, hey, all my money's in whole life. But it was. But nobody knows that. And because nobody knows that, they think they know what they don't know. And that's one of the biggest problems, I think, in the world, but also definitely in the US. And I love that, because creation is the one thing that will differentiate the 5 versus the 95%. It's been proven. 5% of the people that will retire financially secure, only 5%.
Yep.
So what's the difference between the 5 and the 95? The 95% conform to somebody's failed idea, somebody's failed reality, somebody's failed plan.
Yep.
The 5%, you, me, everybody we deal with, what did we do different?
Yeah.
Not much.
Yeah.
We created. That's it.
Yeah.
It's creation.
Why do you recommend people use infinite banking and buy cars? Like,
why?
Yeah.
Because everybody's going to buy cars. Mm-hmm. And if we eliminate cars and from the infinite banking, there's too many people that don't know how to invest money. They haven't learned how to invest. They just invest in things because their cab driver or their Uber driver tells them this is what you should invest in. They don't know, like, and understand what they invest in, which is more dangerous than anything else, but they're always going to buy cars. Yeah. So with cars, let's just say car loans are 7% right now. That's 7%. Most people can't even find mutual funds or an investment portfolio that will consistently pay you 7%. So for me, I do talk about cars a lot, and I do have lots of very nice cars that are all funded through my banking. And a lot of people are like, why are you doing that and not this? Because that is the safest place I can go for making a decent return that would rival what I'd make in the S&P 500 over a long period of time. And I get to drive the car that I want. I love Porsches. I don't hide that. I'm not a material guy. I don't wear fancy things, dress fancy, but I love my car.
So is it another way to say, like, by helping people buy cars with life insurance, you're just creating a more, they're just saving more. You're just
a foundational piece.
You're just getting them to literally save more.
I'm really just getting them to understand the concept through something they're already having to do, because they're going to have to do that. It's also why I talk about paying off wealth with this so much. Like, granted, like, we can go out and invest money and we can buy real estate and do private loans, which I do all of that. But people can't articulate with that yet when they're buried in debt. So let's show you how to build wealth through your own debts and expenses, or let's just show you how to use that stupid car and take back a little bit of extra money every single month that you're giving away. Because if I can teach them how to do it with a car, I can teach them how to do it with private loans and investing and everything else. But I can't go, with investing when they don't know, like, and understand that. They know, like, and understand the cars. So let me show them how to get all their money back.
And I think it's really powerful. If you look at high interest rate debt, that's like a guaranteed. Not investment advice, but like, if you have a credit card line and you pay that off, whether it's with cash or with infinite banking, like, you're getting a guaranteed rate of return because of it's the reverse opportunity cost. Like, this is what you would have to pay. And so, I mean, there's really,
it's single biggest topic I talk about in all my videos is debt, and exactly what you just said, because it is the fastest way every single person can build wealth, and it's through their own debt.
What are your thoughts on 30-year mortgages and just, like, I've heard some people teach infinite banking and they're helping people pay off their mortgages with infinite banking because banks are evil. And that's I'm just curious.
It's not a fundamental reason to pay off. It's not just because banks are evil isn't a fundamental reason to pay off your mortgage. But if you understand the velocity of money and you understand the velocity of interest and how banks make money on a mortgage, I mean, so many people are like, my mortgage is only 3%. I'm like, no, it's not. Read the fine print. Your mortgage is probably like 60% in the first 8 years. You're paying 60% interest in those years because it's velocity. Your rate is only 3%, but you're giving away 60%.
Right.
So I'm not the guy with infinite banking that teaches paying off your mortgage. But do I tell people to pay off their mortgage? Absolutely. But I usually don't do it with infinite banking because a house mortgage is the biggest debt most people have. So if we're going to devote infinite banking money to paying off a house, we have no economic value today, next year, the year after. So most people will never complete the job because they won't make it to the end.
And then all their money's tied up.
Well,
and the goal is you have a paid off house, then what?
Then you buy another house.
Well, then it's like
you upgrade
the
to
only
a new
way
house.
that you can get that money out is you sell or refinance or, like, do a HELOC.
I teach people using HELOCs. That's what I tell them to do with their house. And I don't tell people to take their HELOC, put it into a policy and do that. I'm not that guy. Now, do I have people on my team that like doing that? Yeah. I'm just not that guy. I have a HELOC on my house and I lend direct from the HELOC. I don't take the HELOC into my whole life. I just don't.
30-year mortgages, I think, unpopular opinion, I think they're amazing. I understand when you look at the first 8 years and you look at all the money going to interest, but if you look at opportunity cost of, like, yes, if we just look without the value of what we could grow money, you're totally right. It's like, then the goal is let's pay less in interest. Well, you also have to balance the other side. And if you have a 3% mortgage, mathematically, you need to earn 3% or more, 3% or more. And so it's, again, now that we're at 7-8%, this could be like, and then you look at the market all-time high in where interest rates are at. You could make an argument that paying off debt at 8% could be better than putting money in the market. You could make the argument there. My whole point is, I'm a fan of, mortgages for a lot of different reasons, from just like cash flow, inflation. And
I'll never agree with you that 30-year mortgages are amazing. I just won't.
What can I get you to do?
Let me finish that. Everything else you said is exact.
Yeah.
I never will tell people, take your policy and pay off your mortgage. We teach it in the one video, but you notice it's the very last thing, because that chiropractor example we give, he pays his mortgage off, but that was after everything else was paid off.
Yeah.
Okay. It wasn't before. So I just think the opportunity cost that people would give away by trying to pay off a mortgage using this is far greater than anything they will ever get from paying their house off. And once you got your house paid off, what do you got?
Yeah.
A bunch of bricks and mortar that you can't, it's just dead money.
What could I do to convince you that a 30-year mortgage is a great tool versus a HELOC?
Show me a 30-year mortgage not issued by a bank.
Okay. But HELOCs are issued by a bank.
They are. And I do use banks, so you're right.
But even like a HELOC, I would argue that a 30-year mortgage sold the note is safer from being called than even HELOC.
They are.
So
much safer.
So it's just like,
but I don't know if you need to convince me that 30-year mortgages are great or not great.
It's a tool.
Because it's a tool that everybody in the business is going to use. And I'm not out there telling people pay. I mean, I got maybe 2 videos that says, hey, here's how I'm paying off my mortgage.
Totally.
But remember, I'm paying off my mortgage because I'm financially able to. And I have disposable income that listen, I could put it here, there, but I just don't want a mortgage with the bank.
Yeah.
But you see, when I pay the house off, guess what I'm going to do? Get a big old fat HELOC and lend from that. So it's the same darn thing, man. So I'm not disagreeing with you at all about mortgages. Okay. I think they're never going to go anywhere. And I think they're a great tool to be used.
What is your thoughts on the people out there on TikTok, especially just pitching infinite banking? What are your thoughts? A lot of them are using it, IULs. But even before that, and again, with a good, you have bad. You guys inspired a lot of people around this concept. A lot of people are looking at your videos and saying, I'm clipping this, or, and I've had people use my book and pitch garbage. That's the cost of putting your name out there.
Yep.
What is your initial thoughts on the lot of noise out there that, we're a part of? And what are the things that make you cringe inside?
So first off, I'm flattered. I'm flattered that there are people out there taking my content. I don't get mad when I see somebody repurpose my video to try to sell IULs. I'm actually flattered because they found my video and something in there rang to them. But then they went to the dark side and they said, I can make a bunch of money. And they're putting themselves before their client and they're not giving first. And that is where I really have a problem. IULs I will never like, but I've been doing this for 21 years. And in 21 years, I've watched the rise and fall of ULs, the rise and fall of VULs. I've seen the cycles of these new fancy pitched vehicles that pay high commissions. And IULs will go by the same path as all the others. They will not make the long run. I don't care what anyone says. They'll always be around, but they won't be as prevalent as they are now because they will fail in the next economic downturn and people will see the colors of them. So I get mad, but I also recite the serenity prayer a lot. And I understand the things that I can control and the things that I can't. And I know the difference. And I can't control what other people do. So why? It's kind of like, an eagle flies, and a crow is one of the only birds that will attack an eagle, but an eagle never, attacks the crow. It never goes back at the crow because it's not going to waste his time on a stupid crow when it's an eagle. It's like, if you're going to be an eagle. Don't waste your time, trying to fight crows. I'm just done fighting with them. And that's a relatively new thing.
But is it the only thing that you disagree is IUL, or anything else that people are saying?
No, I disagree with a lot of the ways people are teaching, the infinite banking concept. And I think, they don't even understand what the process is. They think it's just a product, and they're trying to sell a product and say it's IBC. IBC is a process. R. Nelson Nash, and I think that's the one thing I disagree with. All these people on TikTok, and we'll just pick on TikTok because it's the easy one to pick on. They're talking IBC. Oh yeah, we do IBC. They don't understand IBC because they never read Nelson's book. They never went through and became an IBC practitioner. And therefore I think they're just selling a bag of lies.
Yeah. I mean, we could unpack that.
I try to keep Nelson's vision alive.
So let's talk about the process there. What is the key to the we talk about process of product, and you talked about your elevator pitch. It's like one thing, one step. you change one thing, one step. What are the, like, what is the essence of the process?
It's a circle. Okay. It's a circle. Your money starts on the left side of the circle, moves over to the right side. We'll call that the opportunity zone. From the opportunity zone, your money has a chance to go work for you, paying off debt, buying cars, investing in real estate, lending money out. But when it's working, money works for you, and it will always work for you 24/7. Unlike we can't work 24/7. Money can't. And when it works for you, it makes more money. And when it makes more, you complete the bottom part of the circle and you send that money back to its original source, which is your banking system. And the more times, like Monopoly, the more times we can go around that circle, the more wealth we create and the more good we do out there, and we do it in full control. So that's basically the big thing I do is I've literally simplified this whole thing to a circle. Just move money around a circle and you're fully in control of it.
And you could put your money in a savings account, but life insurance over a long period of time,
but I do
give
teach,
you 5, 6, 10.
I even teach that because
because it's easier to understand. Like people,
Australia, New Zealand, other countries, they don't have the vehicle. They don't have the machine. So I teach infinite banking using bank accounts, brokerage accounts,
which is beautiful because it's like you see it grow every year. It should grow if you're paying yourself back because every year but then it's like if you just switch out the product with a properly
then
structured
it becomes
life
more
insurance,
efficient.
It becomes
That's it.
Any thoughts on designing life insurance? Do you have any thoughts around like your 2 cents around designing? There's some people are heavy front loads, 1090s, like, or is it just every person's a little different? Okay.
That's my answer. They're all good to solve a specific problem.
Okay.
Every design works if it solves the proper problem. I think what I don't like, and I'm not going to use the name, but you know who I'm talking about, are the people that go out there and say, this design is the best. That's a lie. No design is the best. Nelson 60/40 is not the best. The 90/10 is not the best. There is no design that's the best because no one has the same problem they're solving. If everybody had the same problem, great. Maybe then we could make an argument that there's one design that's the best. But until that day comes, and it never will, everybody's problem is different, which means every plan design has to be unique to solve the problem.
We had someone in our firm come in and we actually had to give them a majority-based policy because of an estate purpose. And there's a lot, it was like, but I never thought in a million years, knowing what I know about life insurance, that we would design this, but this design was like the best fit for this individual. And they were super well educated. Like they were the ones working with us. And it just goes back to what you're saying is like, you got to get really clear about where you want to go, what you're trying to accomplish. Remember, life insurance is just a tool, a part of the process. And that tool needs to be designed as a proper foundation. And not all foundations are created equal. If life insurance didn't have any other benefit other than the rate of return and borrowing function, unpopular opinion, I don't think what we do is that valuable. If people understood what I know about life insurance and how it can be set up and used, there would literally be a freaking line outside the door. I told this to an executive at an insurance company, and he said, no one will ever line up to buy life insurance.
Nobody wants to buy anything, but everybody wants what life insurance does.
Agree.
How many people actually go through that? They want everything whole life does. But then when you tell them what it is, they don't want it anymore. That's sad.
Why do you recommend people use infinite banking and buy cars?
Why haven't you gone through and become an IBC practitioner?
It's a great question.
Yeah.
There's really two answers I'll give you. Now I'm going to ask you a couple hard questions. You ready?